two speakers, Julie Cox and Sanjib Kalita. Julie Cox is the Vice President of Financial Services at sheerID, responsible for the strategic direction, vision, and performance of sheerID's financial services portfolio. Prior to sheerID, Julie led the sales teams at the National Student Clearinghouse, Edbacker, acquired by LivingTree, and USA Today. Sanjib has been marketing financial services for over 20 years. He is editor-in-chief at Money 2020, a fintech and financial services event business he helped grow from startup to successful exit. He is also founder and CEO of Guppy, a fintech startup focused on credit data control and quality, and a partner at Reason Inc., a marketing and innovation strategy consultancy. A fintech leader for over 2 decades, he has worked for large organizations like Citi, where he managed one of the largest credit portfolios in the world, Intel, where he helped launch their graphics chip business, and Google, where he worked on Google Wallet, as well as for multiple startups with multiple exits. Please join me in welcoming Julie and Sanjib to the stage.
Thank you, everyone. We're really excited to be here at the Banking Technology Forum at the Customer Experience Summit. Today, we're going to talk to you about increasing revenue and customer engagement through personalized identity marketing. My name is Sanjib Kalita. I'm the CEO of Guppy, a fintech, and the editor-in-chief of Money 2020, a fintech conference. I've been part of this industry from many different perspectives. I started off at Citibank, where I helped manage a $30 billion credit card portfolio. Then I left to join a fintech called TXVia, which was acquired by Google. And at Google, worked in business development on Google Wallet and Google Payments. And most recently, as I mentioned, at Money 2020 in the conference industry. So I've seen this industry from many different perspectives, and I'm really excited to be here today with my friend Julie Cox from sheerID.
Thanks, Sanjib. Me too. So my name's Julie Cox. I'm the Vice President of Financial Services for sheerID. sheerID helps brands identify and acquire consumer communities such as military, students, teachers, and so many more with personalized offers gated by instant verification from the largest set of authoritative data worldwide. My career, the majority of my career has been spent in financial services, partnerships, and growth from well-established, well-known companies to very early stage startups. So enough about me, Sanjib. Let's get started.
That sounds great. Thank you, Julie. So we are at a particularly important time where there is tremendous positive sentiment for the future, and there's great expectations for growth. And it's a bit like we're at the track right before the race, and you got to make sure you have your water, you got to make sure you've got your sneakers, in my case, personalized. You got to make sure that you've stretched out, because once the starting gun goes off, you can't do any of that. You need to prepare in advance. And persistently low interest rates and consumer desire for simple, quick digital interactions are putting pressure on banks to improve their digital experience and reevaluate how they engage with their customers. In fact, a recent McKinsey study showed that 15 to 20% of consumers actually expect to increase their use of digital channels post-pandemic. And the areas of investment for growth for the digital consumer are digital marketing to reach consumers, finding new markets and communities to build new revenue streams, and designing new journeys based on consumer needs, desires, and behaviors. These are things that you need to prepare for in advance so you can compete effectively once the race for digital consumers starts. And to win this race for new digital accounts and build loyalty, personalization presents a real challenge for many banks. In certain respects, it might feel like you're wearing dress shoes at the racetrack. The dress shoes might have been great for a cocktail party, but they're not great for a race. Netflix and Amazon have raised the bar and consumer expectations for what just for me means. They've dramatically upgraded expectations about personalization. And as an example, when I was a banker, personalization meant getting an email or a direct mail piece that said, "Dear Sanjib." And that was about it. That's obviously not going to hold it anymore. And I think that those days have long passed, and we as an industry need to keep up to remain relevant. A recent research study by Arizant, published in The American Banker, identified three very specific areas for FinServ marketers to improve personalized marketing. First was clearly defining personas across life stages and professions. Second was mapping out a clear customer journey for financial tasks and products. And third was gathering high-quality zero-party data for marketing activities. Zero-party data is information provided explicitly from the consumer, typically in return for something of value. For example, sharing information to prove that I'm a college student in exchange to get access to a student credit card. Now, let me ask you in the audience to now think of yourself as a consumer, not as a financial services professional. Say your bank asked you for information for only a specific purpose, and which they used to give you a personalized offer. Now, instead, say that they didn't ask you anything, they bought third-party data and took a guess at a personalized offer for you. Those are very different experiences, and I'd say most would say that the first case is a better experience. This type of engagement drives engagement and, more importantly, builds trust with the consumer because they control the data experience. This perspective on delivering high-quality zero-party data is what's driven the founding and fast growth of sheerID, which Julie will now explain.
I will. Thanks, Sanjib. So over the last 10 years, we developed an identity marketing platform that's trusted by 250 plus brands to instantly and authoritatively verify consumer eligibility. We do this for hundreds of consumer communities across life stage, affiliation, and profession. This allows brands that we partner with to verify groups like members of the military, health workers, small businesses, college students, and more with authoritative data. I keep saying authoritative data. So when I say that, what I actually mean is I'm talking about data from the official system of record. Like, for example, the Office of the Registrar of a university for a college student. What I do not mean is screen scraping or inferred data from a machine learning model. When a consumer opts in to provide their non-sensitive credentials for eligibility, the brand receives high quality, zero party data to build a marketing relationship. We can also verify 99% of employees, including gig workers, to determine employment not found in credit bureaus.
Yeah. And sheerID's personalization and customer verification solutions can be used for multiple use cases through the digital customer journey. And first of all, for example, you're in a sprint for acquiring new digital accounts, or you're in a marathon looking to extend the customer lifecycle value. Or if you're looking to improve loyalty or partner programs, which can be a bit like a decathlon. Or if you're in risk decisioning, which is a bit like being a judge in gymnastics or a high dive competition. Or finally, if you're in regulatory compliance, which is a bit like testing athletes for controlled substances. And I think the takeaway here is that sheerID gets you in the game and they provide you the tools to compete more effectively in the game. sheerID has several engagements with top 50 banks that I'm not at liberty to share details with just yet. However, we do have several examples with innovative retailers that demonstrate how they're driving revenue and winning new customers with sheerID's platform.
Yeah, we sure do. Why don't we start talking about Comcast? So Comcast knows that they need to win college students to fuel the future of their business. In fact, they found it's 6 times harder to get someone to try their service once they turn 30 years old. So we're seeing this in financial services as well. In a recent McKinsey study, 29% of Gen Z report using 5 or more fintech apps to approximate a traditional banking relationship. As Comcast built programs to win Gen Z subscribers, they quickly found traditional digital marketing approaches like zip code and geo-targeting around a university to be imprecise at best, particularly now when students are remote learning. We help them build a gated, personalized offer just for college students. This would be like private banking for marketing. The offer was exclusively for students, and because of this, it received incredibly high engagement, boosting conversion by 91% and increasing subscribers 6x. And Sanjib, that made me think a little bit about the effect of this. Do you think that this could potentially have some impact, this kind of conversion and increase in activity, have a place in financial services as well?
Absolutely. I mean, I've had hands-on experience in the past where we've included language about what the customer does, and this is many years ago, but I think we increased cross-sell rates by almost 2x. I think it was
wow.
Between 60% to 2x. So yeah, it definitely does drive results.
Excellent.
And I guess to go on to the next example, Lowe's, in addition to increasing engagement, these types of offers provide high quality zero-party data for remarketing. As I mentioned earlier, sheerID uses authoritative data sources to determine eligibility. For example, for a military individual, that means providing their name, date of birth, branch of military in an online form, and sheerID does the rest. Verifying their military status among dozens of military databases, and as Julie, as you mentioned, these are the databases of record. And for Lowe's, this provided them an everyday offer. This allowed them to provide an everyday offer for the military. They have a long history of supporting the military, plus the military typically own a home, they're do-it-yourselfers, and are twice as likely to own a small business. Lowe's promoted this offer heavily on digital and through broadcast radio. Because they used a verification solution to determine eligibility, they were able to go big on promotion and not worry about fraud, which is typically around 30 to 35%. And like Comcast, they saw great response. In fact, their director of promotions said that this program generated 2 to 3 times the response that they saw from their next best campaign. I thought that this was really cool. Who would have thought that you could use broadcast radio for personalized offers?
Not me. That's for sure. So now I want to share a story about customer loyalty. Loyalty isn't just a retail problem, as we know. In a recent study, we found that members of the military change banks every 4 years. Understanding that loyalty is hard-won in retail, Michaels took their program to the next level by tying a personalized offer program to their loyalty card. So whenever someone verified through us for teacher, student, or senior offers, they'd be added to the loyalty program, which gave the consumer the ability to engage with Michaels through every channel. Not only that, it also gave Michaels 200,000 new customers that they could build a relationship with. In fact, they found this group of customers shop with them twice as frequently and spent twice as much as the average customer. So that makes me wonder a little bit too about loyalty for banking, Sanjib. So do you see a difference between being loyal to a bank, or is there a difference in a preference use case?
Yeah, that's a great question, a great point, Julie. I'd say that for decades, loyalty has been the North Star, but now I think we're entering a time when we're shifting to preference, and it's a difference in perspective. Loyalty assumes that because I have a customer, that customer will continue to be my customer, whereas preference, flips that around and says, at every single point in time, at every interaction, how do I build preference? So, for example, rather than if you have a credit card with loyalty points, assuming that they're going to use that to buy a concert ticket just because you get the points, enabling that customer to get front row seats or backstage passes if they use that credit card. So it is a change in mentality there. And so I guess moving on to the final example I want to share with you is Purple mattresses. Like banks, Purple is in a very crowded industry. There are over 200 direct-to-consumer mattress companies out there, which I didn't know. And like banks, once a mattress is in the house, it's hard to get it out. It tends to stay pretty stationary. Also, like a banking relationship, a good mattress can help you sleep really well, but a bad mattress can give you nightmares. And so there's definitely that analogy with banking too. And what Purple did was that they had a very successful program for military, and then they added students, teachers, first responders, healthcare workers, and truck drivers. And with the expansion of that program, they were able to reach their previous year's performance in just 8 weeks, producing $25 of revenue for every dollar of marketing investment, which is amazing. I mean, I'd love to be able to hit my year-long goals in 2 months. So I think you'd agree with that, Julie.
Me too.
And I think we're sort of getting close to the end here. And I think, the key takeaway here is that the bar for personalization has increased, and we as an industry need to keep up. And hopefully today you've gotten some ideas, you've seen some tools that can help you compete effectively and help you win that race for that digital customer. So I don't know, any thoughts, Julie? Any final thoughts?
Yeah, so we've crossed the finish line?
I think so.
Oh, awesome. Terrific. Good. My feet hurt. Terrific. So we've linked the American Banker study for you here if you'd like to take a look at it. If you'd like a copy of these slides, just drop me an email. My email is on the screen, or go ahead and reach out to me on LinkedIn. Thanks so much, Sanjib. This was great. Thank you.
Thank you very much, Julie. Thank you, everyone.
That's it for today's general session. At 2:30 Eastern Time, the tracks will begin. We have 3 tracks today: marketing, onboarding, and engagement and retention, as well as the innovation stage. We'll be taking a deep dive into industry trends, and all tracks have world-class speakers, so you can't go wrong. Enjoy.